Hello and welcome to the Daily Forex Report for May 19th. We are looking at the US-Japanese yen pair. This pair broke to the upside after having an inside bar, did move higher, tagged several points of previous support and then resistance before coming down and closing lower. We are looking for this pair to start heading to the downside. Look for it to potentially go as high, though, if it does move higher, up to 82.64. Possibly as low as 80.82. Look for some resistance around 82.25 and look for some support around 81.25. Now the Euro USD pair, this pair closed higher. Let me zoom in a little bit closer. This pair closed higher, has been moving higher for the past couple of sessions, although overall moving sideways long term. Look for it to potentially go as high as 144.40. Possibly as low as 141.35. Look for some resistance around 144.25 and look for some support around 141.89. Now the pound US dollar pair, this pair closed up, did create an inside bar, is moving sideways. We're looking for it to potentially go as high as 163.59, possibly as low as 160.64. Look for some resistance around 162.87 and look for some support around 161.00. Now looking at the US Swiss, this pair had a very large range for today, especially for the body being so little, closed a little bit down, moving sideways. Look for it to potentially move up and hit resistance around 0.8875 and moving lower, hit support around 0.8763. Now, as far as news announcements go, we have the Bank of Japan releasing their interest rate decision. No time given. Should be tomorrow. Consensus is they're going to hold rates at 0.10%. Real surprise there, I'm sure. The surprise would be for them to move it after 10 plus years. Now, we also have the Bank of Canada releasing their consumer price index for April at 7 a.m. Eastern time. Consensus on that is that it has dropped a little bit from 1.7 to 1.6%. We also have their CPI year-to-date being released, and it's showing a slight increase from 3.3% to 3.4%. Now, what am I looking for during this next session? Well, if we go to the US-Japanese yen pair, grab our Fibonacci retracement, move it down, you can see that we have broken over this last session. We broke into and ran right up to previous areas of resistance, broke the 38.2 level, moved higher, hit resistance, and has pulled back and closed lower. Now, if this comes on down, we are looking for a break of the 23.6 line, which is around the 80.95 mark, so 80.95. and looking for it to move lower. Putting our stop loss right here above the 38.2 level. So we have a stop loss here, which is around the 81.82 mark, and then looking for a take profit right here around the 0 mark, right around the 79.50. Okay, so what that looks like from a risk to reward standpoint, you're looking at a 88 pip move to hit your stop loss, and 139, 140 pip move to the downside. So risk to reward pretty good. Now there's another play. If you don't want to wait for that one, you can basically look to go short right now, and you can place your stop loss either right above the 38.2 and look for it to not go above that point, about 25 pips, and look for it to come on down to the 62 pips down here to around the 8100 mark. Or you can put your stop loss right above the high here, which would be about 62 pips, and have a risk to reward of 1-to-1. Obviously, if it spiked and took out this area, it would definitely hit your stop loss. But using a risk to reward of 1-to-1 would be a little bit better opportunity, I believe, to have a successful trade. The fact that it spiked above this Fibonacci area and pulled back and closed lower, I believe we're going to see it move lower over the next session. Well, Well, that about wraps us up for today. Until next time, this is Jason Fielder. Good trading.